we've got an absolute stellar panel with us to look at the policy implications of stablecoins, central bank digital currencies, but also importantly, other crypto instruments. And what that means, both from a business opportunity, market development perspective, but as I say, also from a public policy response in relation to potential risks that we might need to take into consideration. We have with us today Christopher Wallard, who is the Global Regulatory Network Lead at EY, Faria Shirzad, who is the Chief Policy Officer at Coinbase, Marco Santori, the Chief Legal Officer of Kraken, and some of these companies will introduce themselves briefly. Christina Segal-Knowles, who is the Executive Director for Financial Markets Infrastructure at the Bank of England. Marcel Haag, who is the Director for Horizontal Policies in DG FISMA. And Valerie Shepanik, who is the Director of the Strategic Hub for Innovation and Financial Technology within the SEC, so the US Securities and Exchange Commission. So very, very good panel. Thanks to each of you for joining us, first and foremost. And maybe I start with you, Marcel, maybe to give us not so much a sense of the market developments and background, but a little bit how you approached, as the Commission, the regulation, the policy response to crypto assets, stable coins, and maybe also a bit of an outlook on CBDCs, how they fit in, on which we had a separate panel. But what is kind of the European, the Commission's approach to these instruments?
Thanks, Nick, and good evening to all, or good afternoon. Now, our approach to the regulatory framework for private solutions in the crypto area, you know that we are working both on improving and enhancing our existing payment system. So, for instance, we're working on instant payments, and we are at the same time preparing a regulatory framework for stablecoins. We have opted to take steps addressing all the issues raised by crypto assets, including stablecoins, at once, and to propose a comprehensive framework focusing on issuers and service providers in the crypto asset ecosystem. So we made a proposal that deals with both unbacked crypto assets and stablecoins that are not covered elsewhere in our financial services legislation. So our approach is we are plugging the gaps in our regulatory framework. We cover the issuance of crypto assets. We set out requirements for service providers and for the supervision of issuers and service providers. Now, with this, we try to implement three principles: market integrity, consumer and investor protection, and financial stability in case that that crypto assets acquire a market presence that could trigger stability issues. Maybe I'll leave it at that. I believe that this gives you an idea of our approach. I can tell you that the member states and the Council have already agreed on their approach. We're now waiting for the European Parliament to come to an agreement, and that would allow us then to enter into the final negotiations between the Council and the Parliament to finalize this piece of legislation, hopefully in the coming months.
Thank you. I think that's a good introduction. I think if I look at the European framework, it's a combination, as somebody said earlier, of entity-based regulation and activity-based regulation. Kind of, in some cases, it's the issuer that's regulated. In some cases, it's the activity specifically that is kind of caught. Christina, how are you looking at this from the UK perspective, from the Bank of England perspective? Will you be copying MiCA? Are you looking at a slightly different approach?
So I think many of those in the audience have probably seen that HM Treasury has consulted on an approach to crypto assets regulation with a real focus at this stage on stablecoin regulation. And I think the founding principle there is really thinking about the principle that keeps coming up in some of the international communications on stablecoins and crypto assets, which is same risk, same regulation. So what we're not looking to do is create a bespoke regime that's about the technology that's being used. Instead, we're looking at what are the activities and how do we fit them into a framework, especially the existing frameworks that are relevant, given that in many cases, stablecoins aren't doing something new, they're providing a different way to do something that exists. So the basis of that the consultation was an idea that would allow those smaller stablecoins to be registered as effectively under the existing e-money framework with some tweaks to make sure that could be brought in. And then in line with our existing framework for systemic payment systems and systemic providers of payments, bringing systemic stablecoins into regulation by the Bank of England. And that would then allow us to use our powers that are designed for financial stability for those stablecoins. And I think that's really important because I think so many of these propositions are seeking to provide a quite widespread use of payments in our economies. The purpose of financial stability is to make sure that households and businesses can rely on the services that are essential from the financial system. One of those essential services is payments. That is really crucial. And so when you think about new providers of payments, it's really important that they were brought in the right regulation to ensure that disruption would not occur, that you wouldn't have a financial stability incident. I think that's also really important to support innovation. The UK wants to be a place where innovation can take place without regulation moving around. You need to get the right regulatory framework up front. So maybe I'll pause there. So it's a bit of a different approach. So there are many similarities, I think, and we've been in close contact with our international counterparts, hopefully moving us in a direction that provides continuity across jurisdictions.
Can I follow up with one small question, Christine? And if we go beyond stable coins, where I see this makes sense, where they're asset-backed, and look at other forms of crypto assets that are being traded. In the EU context, we're trying to capture both of them de facto in MiCA or squeeze them into MiFID. How do you see it for those type of instruments? How do you think the UK will approach those?
So I think again, it goes back to that principle of same risk, same regulation. So we've already taken action in that initial consultation on certain elements, and there are additional actions that the government has taken, especially working with my colleagues at the FCA around financial promotions, and thinking further around what the appropriate powers should be. I think when it comes to the unbacked crypto asset space, we're working through, again, how do you apply that principle of same risk, same regulation? How do you think about what takes into account the risks that various crypto assets could pose to the economy, including, I think, both through their connections to the existing financial system, so established, important financial institutions. So we've been working on guidance for how do our already regulated firms interact with crypto assets, and then thinking about a regulatory framework for the United Kingdom around, again, making sure that if crypto assets are posing risks that are similar to risks that we know need to be regulated for financial stability or for other purposes, whether that's market integrity or consumer protection, some of the things that some of my co-regulators in the UK care deeply about, that we make sure that we capture them. So I think we're in the process of going through that, but again, with a focus not necessarily on regulation for crypto assets per se, but a focus on making sure that we don't have suddenly a regulatory system that's very uneven, because if you're using a certain technology, you have one treatment, you're using another technology or an existing technology, you have something else.
Thank you very much. And we will come back to that point around the nexus, which I find very interesting as well, to established regulator at financial institutions. Maybe start ending kind of this first introduction again on the public policy side. Val, I pass to you as well. We've had the, White House's working party, and you've been looking into what to do in the US. Again, maybe the same question, how are you looking at stable coins, and I guess from an SEC perspective, more at other crypto assets from a regulatory perspective, bearing also in mind you've got case law, which is also maybe helping or not helping you in distinguishing here.
Yes, thanks for the question and for the opportunity to be on this panel and address these questions. Again, my responses are really based on my own views and not necessarily those of the commission or any other staff member of the staff of the commission. There's a lot of work being done internally and within the government on looking at stable coins and digital assets more generally. I would say we are studying them closely. We understand that stable coins are a term used to connote that there's some mechanism to stabilize the price or value with respect to some other referenced asset. But keep in mind that you know, any particular coin may not in fact be price stabilized. We also use and hear the term, backed and unbacked crypto assets. I think it's important that we look at each one and say, how is it backed and is it backed at all? So I think, we're gonna look beyond the labels that are used, whether it's called a stable coin or some other digital asset. We're gonna, again, examine the economic realities behind it, all the facts and circumstances, look how it's offered and sold to see whether it falls within the definition of a security or a commodity or a derivative or something else. Along the lines of what Christina was talking about, we regulate things, same activities, same risks, same regulation. I think that's been a consistent principle in a lot of the work domestically and internationally that we've been undertaking. There is key collaborative work going on both within the US government, and we'll talk, I think, later in the panel about some of that work, including the President's Working Group on Financial Markets stablecoin report, and some of the statements that have come out about, potential CBDCs. There is key collaborative work also going on within, the international community, including through the FSB and the standard setting bodies like IOSCO and CPMI IOSCO, and others. I think, at its base, the commission here is always going to look at the particular facts and circumstances around a digital asset to see if it is a security. If it is a security, then we do regulate it. We regulate activities concerning it, and we regulate entities and persons who transact in it. So our regulation is quite broad. Our definitions of securities under the securities laws are quite broad, and as they've been interpreted over the years through federal case law. And so, we have tried to be consistent in our approach. There's a lot of work being done. There's a lot of effort, I think, by our chairman, especially to bring more protections into the space in terms of market integrity and investor protection. And then I think overall in the US government, there is a strong desire to bring a comprehensive framework around all aspects of things like stablecoins, including risks that exist because of the issuance and, framework around the issuance of stablecoins, as well as risks that exist based on secondary trading markets and how the participants in the markets interact together to deliver whatever product or service we're talking about. So I'll just kind of pause there, and I'm sure we'll pick these things apart a little bit further in the panel.
We certainly will. But I think I would like to first pass over to our, so to speak, industry representatives to get a bit of a sense of what's actually happening in the market. How's the market evolving? What are some of the trends that you see? And we come to maybe use cases as well. Where do you see some of the particular use cases for some of these instruments? I know, Faria, maybe I can start with you. How do you see, and maybe say a few words about Coinbase. I think everybody should know it, but you never quite know. But how have you seen kind of the market evolve, and how do you anticipate, what's kind of the business vision for Coinbase?
Thank you, Nick. I appreciate the opportunity to be here. So Coinbase was founded in 2012 primarily to help customers have a safe and secure way to custody Bitcoin. The business has grown and expanded dramatically, largely tracking the evolution of the crypto markets more broadly into the business that it is now, which is a US-based business with about 78 million verified users on the platform, operating in about 100 countries, regulated primarily or operating primarily in the United States through a multitude of state and federal regulatory touch points covering different aspects of our business. You could think of Coinbase as essentially three different verticals. One is the retail business, which is probably the one that people are most familiar with in terms of the early adoption of the crypto markets. And that's the one that has the tens of millions of users on it. The second is the institutional business, which is growing dramatically. We have probably about 10,000 institutional clients. These are among the largest investment operations in the world who operate through our platform and who are bringing more institutional funding and trading expertise into the crypto markets. And then the third part of the business is what you would call the ecosystem business. So there's a range of activities and innovations in the crypto space that Coinbase is involved in, including a blockchain cloud, an NFT business, and a range of other activities. We also have a very active venture capital operation that is very involved in investing in innovators in the space. I think when you look at a company like Coinbase and our posture towards public policy, I think there's a few things to keep in mind. One is we very much embrace regulation. I think the fact that we are a trusted platform to users is a part of the success that the company has. And the second is that regulatory clarity is critical to crypto adoption. And so a lot of the attention that the regulators on this panel and in other markets have brought to this space is something we welcome, and we have tried to and are trying to do more to contribute to the efforts to kind of get people thinking about what the appropriate regulatory and policy framework should be. In fact, in the United States in September, we issued something called the Digital Asset Policy Proposal, which was our effort to make a contribution to the US debate. But we're obviously interested in MiCA and in Europe. We're interested in what the government in the UK is doing in terms of developing its strategic framework around crypto. And so we welcome all of it. The last thought I'll put, Nick, and I know there's a lot in your question, is I think consistent with how we run our business, the crypto markets are developing dramatically under our feet, I would say. The core innovation of crypto is the ability to represent ownership interests immutably in digital form. And so the version that is most evident, and I think regulators are paying a lot of attention to, is the emergence of significant interest in tokens and the buying and selling of tokens. But those tokens are ultimately transitioning themselves into more and more use cases, including things like NFTs and other tokenization of ownership interests. And so as people think about the policy framework, there's an evolution that's occurring in these markets that I think is important for all of us to keep in mind as we think about the right policy framework.
Thank you, Faria, for coming to that. And I want to come to that in more detail. We'll come to that in more detail. But just one follow-up question. I know it might be obvious for you, but when we started talking about MiCA, it was all about stablecoins. Whatever stablecoins means. I take Val's point, as a fact. It was all 90% of the negotiations focused on this one single aspect and not really on the rest of the proposal. But where do you see kind of the idea about stablecoins go effectively? And I'm asking, obviously, after the announcement on DM, is that kind of something that's kind of vanishing or becoming less relevant? Do we really have to look more, as you say, at tokenized representations of underlying value or other forms of crypto evolutions? I know the market can change quickly, but right here, right now, how would you advise policymakers what part should they really focus on?
The advice that we give, but just to take a step back, Coinbase is not an issuer. And so we operate our business from an asset agnostic perspective. So we don't necessarily have a view on stablecoin versus non-backed crypto assets. But as a general matter, I think my own perspective, as a policy person on behalf of my company and the industry broadly, is to simply make the point to policymakers that these markets are deeply integrated. And so having an integrated policy framework makes sense, because a lot of crypto market transactions are stablecoin to crypto and not necessarily fiat to crypto. And so a lot of the rules that go around stablecoin trading, are obviously implicitly creating the rules around crypto trading. And so I think having a perspective that allows, I guess you could call it an open architecture, when countries move first on the on their stablecoin regulations, to make sure they're doing it with a perspective towards broader crypto markets. I think that makes sense. That's why I think MiCA, in a way, is a thoughtful approach, in the sense that it's trying to create a new policy framework around crypto broadly defined, including stablecoins and non-stablecoin crypto assets. It's trying to bring a unified, a framework around a very large market, meaning the EU. And it also recognizes that the technology is different and requires a different application. And so there are adaptations that need to be made with regard to legacy financial rules like MiFID and others. So in point of principle, I think Europe has the right approach to it, although, the details are obviously, things that require a lot of attention and debate.
Yeah, thank you. And I think you captured it well, that really it's an ecosystem where these different instruments work together with each other. You opt into different products and in and out. So as you say, the existing stablecoins are really kind of alternate. Well, the intermediate step between fiat and the traditional crypto asset. But Marco, the same question to you. I don't know whether your observations mirror what Faria has said, but I'd be interested also from your perspective of another exchange, how you see the market evolving.
Happy to share it. So thank you for having me here. By way of background, Kraken is one of the world's largest digital asset exchanges. We're trusted by millions of users worldwide, operating globally. We're a remote first company. We do have some physical offices, but mostly only where required by our local licenses. That's something that Coinbase and Kraken share. And like Coinbase, we're working to ensure that cryptocurrency is well understood by as many people as possible. We produce extensive educational resources for investors, policymakers, regulators, traders, all across the board. Kraken's been operating and doing this since 2011. I'll say that when it comes to stablecoins in particular, it is an empirical fact that these things are desired by the market. Right, the question of whether stablecoins are something that people want is an answered question. They've shown their utility in the past month or so in particular, where the market conditions, not only in the world of digital assets, but also in the world of traditional markets, has really been all across the board. People have flocked to stablecoins. Kraken also doesn't view its role as picking winners and losers in the digital asset ecosystem. We take our role as a facilitator of transactions and a provider of robust open markets. We take that seriously. So every single asset that trades on Kraken has passed a significant risk evaluation, a legal evaluation, security evaluation. In terms of policy looking forward, I think that it bears stating that this august group of people today care about stablecoins because of DM, because of Libra, because of Facebook, and you had actually raised this point earlier, in that without that specter on the horizon, we should probably be asking ourselves what our goals really are. when it comes to regulating digital currencies and broadly, and stable coins in particular. Kraken is different from other exchanges, and Faria's description of Coinbase is actually a really good lens to view this through. Like Coinbase, Kraken is regulated around the world in a number of different jurisdictions. In the EU is a multilateral, or in the UK is a multilateral trading facility. In Japan is they have a financial services license there, and a patchwork of licenses and registrations across North America. Kraken is different in a number of respects. One, Kraken is not an affiliated issuer of a stablecoin. So I think issuers can bring a really important perspective, obviously, to this discussion. But as a truly neutral party, our viewpoint on stablecoins is different. We really have no interest in picking winners and losers. At the same time, Kraken also has a bank charter. Kraken is a bank in the United States, or at least has a bank in its corporate org chart in the United States. It's a bank that will soon offer depository accounts, checking accounts, and you'll be able to see your balance of fiat currencies and government currencies right next to your balance of digital assets very soon. These are all different perspectives that are worth gathering viewpoints on. But I think the landscape has changed considerably, and we have to be realistic about that. This is not the same landscape from a regulatory perspective and a policy perspective as it was when Diem came along in 2017, 18, and shook the table and caused us to look into the scaled effects of stablecoins. Either way, the fact remains that people want these things. This is something that we as facilitators take very seriously, and we want to provide to them.
Also ask you a follow-up question, which is, listening to you and Faria, I think we see two, I agree with you, the market has moved on so much, but we see two kind of mega trends at the moment. On the one hand, central banks are trying to get into the action with CBDCs on fungibility, a digital representation of kind of a currency, but based on fungibility and based on scale. And then on the other hand, as Faria said, we see an increasing trend of moving into non-fungible, not easily exchangeable crypto assets, which are representations of underlying assets, which in a way it's a token. It's effectively just a different digital representation of an underlying value. It's not if I understand correctly, it's not creating necessarily new value per se. How do you see that dynamicism? I mean, I understand you're neutral, and that's why we kind of like to have the exchanges here, because you see it from all these different perspectives. How do you see that relationship evolve? Do you think that kind of CBDCs will crowd at the more fungible side of the market and will end up more on the non-fungible side, or is it too simplistic? What's your kind of impression?
I think what we're witnessing is a free market reaction to the stagnation that we've seen in the banking sector globally. That's really the lens through which to view everything that's happening in the world of digital assets today. Consumers are not happy with their banks. Consumers don't understand the role of their central banks. And they are demanding something more. They're demanding something better. They want to see the same level of innovation, the same amount of progress, the same development pace to offer them new goods and services that they see in the private sector around information technology, right? Email, social media, things that are moving incredibly fast in the world of information technology, juxtaposed with those that are moving incredibly slowly in the world of financial technology. Well, that's how you get something like an NFT, right? A non-fungible token. That's how you get something like that. But that's, I think, more directly how you get something like a stable coin. Stable coins do a lot of things, just plain better than government currencies do. And that is another empirical fact that's been borne out by the last few years of their history. They don't do everything better by any stretch. In fact, they have significant weaknesses around consumer protection. And as Valerie will probably opine, investor protection for some of them. But we have to be realistic about like the successes that stablecoins have brought to us. It should be no surprise to people then, particularly those who are looking closely, that consumers would demand the same progress around non-fungible goods, around things that aren't just used as a currency, that aren't just used as an investment tool. Today, we see it, people trading collectibles, collectible art around non-fungible tokens. But please don't let that distract you. That's the least important thing going on in non-fungible tokens today. NFTs, non-fungible tokens, will one day come to represent far more than I think most people, even myself included, are comfortable admitting, because they can so easily and in so liquid a fashion represent the value behind anything. That's coming from the same place as the development in stablecoins, which is to say, free markets, innovators, entrepreneurs, routing around the limitations of the legacy financial system. I think what we're witnessing is something that people have demanded for a long time.
One of the things you're referring to is basically what we call the post-trade space in securities, kind of clearing and settlement, for example, I would imagine. But
that's a terrific example.
Sorry. No, and Christina, we come back to you, can respond as to whether central banks are dinosaurs. But before we come to that, Chris, you've been very patient, and I'm bringing you in kind of at the end, because you've got a slightly more broader perspective in your current role, but also you have a view in your previous role from the FCA as CEO of the FCA. So I think you bridge both sides quite nicely. So from what you've heard so far, both on the market side and on the public policy side, what would be your response to my questions?
So, I mean, I think listening to the debate, actually, I mean, one of the things that really struck me was how far actually we've moved on over the last 2 years. And so if I sort of think back to the points when actually I was involved in the process around thinking about Diem from sort of the regulatory point of view, and I'd agree, by the way, with a comment that was made that said, you know, we wouldn't be here talking about stablecoins maybe in the same way if it actually hadn't come forward as a proposal. But I think at that point there was a tendency to see crypto assets more widely, stable coins, then potentially, you know, this far off prospect of central bank digital currencies as being very separate things, almost competing with each other. Whereas I think the debate, certainly in the last few months or so, maybe a little longer than the last few months, has really begun, I think, to talk about these things as being a continuum. So that's the first thing I think to observe. Second thing is, although there's some nuance in this, so in particular, whether retail customers should have access to certainly the unstable, if you like, or the non-stabilized crypto assets, and you're seeing that in Singapore, you're seeing that in the UK and a number of other jurisdictions as well. That debate playing out. I think the concept of are regulators going to regulate this out? In other words, to sort of keep up the barriers and say this is just sort of the Wild West, and you know, as consumers, as wholesale providers, you're on your own if you engage in this space. Again, that debate, I think you hear increasingly less of. I mean, clearly in some countries, in China, to some extent, some of the position papers being taken by Russia now. There are clearly jurisdictions that still are very sort of nervous about these kinds of things. But on the whole, I think certainly in Europe and the US, what we're seeing is regulators saying, okay, we've now got to regulate in. In other words, we've got to think about this being part of the system long term, and therefore, what are the protections, what are the standards, what's the kind of regulation we think we need to have for here. So the debate has moved quite a lot. And then I think the other piece we haven't really quite touched on so far is clearly there's been an enormous amount of activity with firms like Coinbase, firms like Kraken, in terms of sort of trying to lead the market here. But I think also increasingly what you might think of as traditional financial services players are now thinking very, very seriously about what strategic positions they want to take. You know, do they want to be the issuer of a stable coin? Do they want to have, you know, a significant exposure in terms of their trading operations around crypto? And that sort of bleeding together of, you know, what might at one point seem very sort of innovative approaches to the market with very traditional sort of approaches. It's definitely there. And then I think what you can start to see happening in debate as well is sort of a couple of things. I mean, one, the attention moving towards what I would describe as the next layer of issues. So things like programmability, things like privacy linked to programmability, and those kinds of sort of questions starting to come out more beyond the simple financial ones. And then also the question, I think, here of how far is this going to be done individual jurisdiction by individual jurisdiction, or how far are we going to see a degree of cross-border collaboration in terms of how the approach to regulation begins to manifest itself. And that will obviously then drive quite a lot of the commercial considerations as well.
We definitely come back to the international dimension, but I think you've teed this up really very well, Christopher, because yes, I agree with you. It's really about the question here is how to regulate it in, because if we regulate it out, we don't have to have this panel. But if we regulate it in, then a few things struck me. I mean, the point that we need a comprehensive framework. So it's not necessarily one piece or the other piece, it's a comprehensive framework. What you said at the beginning, also Christine, about the nexus, because, and Faria, what you said about tokens representing something else, and it came up again and again, is the more I listen to this, it kind of, to what extent is really this market then unique and requiring its own regulatory framework? Because once you trade in securities and so on and so forth, you're back in securities regulation, or in Europe, even in commodities, you're back in securities regulation. If traditional financial institutions get more and more involved in this, we've now got the Basel Committee looking at what to do with it on the potential side. If it's a collective investment in Europe, it might be called under the Alternative Investment Fund Directive. Do we need this? And yes, the regulatory framework is, as mentioned, you know, for Coinbase and MTF approach. Are we just dealing with a transition problem here, or is it a broader systemic issue that really requires its own regulatory framework? Because the only thing that I think is, well, that might be new is the actual issuance. Somebody actually taking the risk of taking something and converting it into something else. I might be a bit provocative, but maybe I start with you, Val, because I know, you know, the working paper started looking at these things, and I know there's a unique investor protection angle which everybody acknowledges. But how else are you approaching this as a public policy challenge?
Great question. I think a lot of the discussion over the past few minutes has brought up key issues that we look at as we look at the space. Does this warrant a new regulatory regime, or does it simply fit into regimes that we already have? I think, you know, we've always approached things as technology neutral, same activities, same risk, same regulation. But at the same time, you've got a market that's already operating. In some places, it's operating outside of frameworks that already exist, because maybe the frameworks don't clearly cover what's going on. Or in other jurisdictions, these markets may be operating in non-compliance. It just depends on what jurisdiction they're in. But what we do know is that these markets and market participants have kind of grown up organically, offering a variety of services that may not exist in traditional financial markets in one entity. So you've got a trading platform that offers, for example, trading to retail and institutional. It offers custody. It's oftentimes engaging in proprietary activities or lending and borrowing activities. You know, it's oftentimes, you know, somebody on the panel mentioned interconnectedness, or how these things are interwoven together. We have to understand that a lot of these platforms have a lot of integration with other market participants. So you might have a platform that's not only offering a lending and borrowing program, but they're also issuing a stable coin, and they may be also investing in DeFi or participating in DeFi. So, looking at all the interconnectedness in this industry bears some examination. I think that what we have to do as regulators, policymakers, and working together with industry, frankly, is to say, why do we have the systems in place that we have currently? What public policy goals do they promote? And can we promote and maintain those policy goals, whether it's AML CFT or investor protection or market integrity? Is there a different way to promote them? Does this technology lend itself to a different and better way? And so those communications are very important, and they're ongoing right now. Through my organization and the FinHub, we're having, and continue to have meetings with stakeholders, and I would encourage those stakeholders to continue coming in and speaking with us about how they're operating and how they want to operate, and how they can maintain the high standards of investor protection, market protection that we have currently with a new system. And I think through those conversations, we maybe can figure things out. Getting to the stablecoin report, there's no question that stablecoins are very important in this industry. They not only provide the on-ramp to all kinds of activities such as speculative trading, lending, and borrowing, but they also permit activities to take place in DeFi. So you've got the market, I think, for stablecoins is 170 billion as of this month, which in the grand scheme of the whole crypto market may not sound like a lot, but the percentage of stablecoins in trading pairs is probably over 70%. So you can see that stablecoin is really integral to the trading and lending and borrowing activities that's going on. And it's also providing the bridge into decentralized finance and some of the more kind of novel and experimental things that are going on there. So it's certainly fueling the growth of the industry, fueling the next generation of what we're going to see in DeFi 2.0 and potentially the metaverse and wherever else this takes us. And so I think we do have to, as policymakers and regulators, we want to make sure that people are, first of all, understand what activity they're engaging in. They understand the risks. They understand what product it is that they're purchasing or buying or participating with. So when you've got a stable coin, you've got to think about, it can serve its purpose as a cash substitute, but only if there's public confidence in that cash substitute, and that comes from the redeemability of the instrument and how stable it can keep its value, and whether or not it's redeemable and stable in times of market stress. And I think that's what the PWG report goes into. It also covers that there's not only these risks around the issuance, which have to do with confidence in the instrument and whether or not there could be a run on the stable coin, or whether or not there could be a devaluation in the reserves that back the stable coin, and whether or not you're concentrating economic power in certain participants who are using the stable coin because they have these other connections with, for example, commercial entities. But there's a whole slew, I think, of risks that go along with the fact that stable coins depend on a secondary market of distribution and trading in order to keep the price in line with the peg. So you've got a lot of digital asset trading platforms, secondary players, market making activity going on that's creating an arbitrage to keep that stable coin in line. And when you're looking at that stable coin, you got to see, what is the promise or expectation that that's redeemable? Is that redeemable by the holder of the stable coin? And oftentimes it may not be. Oftentimes you'd have to present your stable coin as a user to a platform. And so then the user is subject to the risks of the platform and not just the stablecoin issuer. You have to also look at how risky are the assets that are underlying the stablecoin. Oftentimes, it may not be a US dollar or euro. It may be commercial paper. It may be a more risky investment that is subject to a loss in valuation. And so I think it's important, if these things are really truly going to be used as payment systems, that people using them understand that there may be risks. They may not be equivalent to a payment system or something that they're used to through a bank or some other financial service provider. And I think the policy and regulatory work is, do we need to put those guardrails in place so that they are, equivalent and as safe if people are going to be using them as such. So I'll stop talking there. I think I've.
Even though you spoke quite long, I do have a very short follow-up question, because you raised Diffie. Because this is the one thing I learned when the Commission came out with MiCA, that suddenly we had all these Diffie guys turn up in Brussels explaining why they shouldn't be in scope, even though they were not in scope. And by waking up all these dogs, there's now been this debate whether they should be in scope. It's an example of inverse lobbying. But it has raised an interesting question around, how do we deal with decentralized finance from a supervisory or regulatory perspective? And it touches a bit on some of the things that Chris said. How are you looking at that right here at the moment? Do you think it's still marginal enough to put it to the side, which had been the European approach, or how to deal with that, basically, because you don't quite know who to supervise and who to kind of sanction?
I think decentralized finance is a word that is used to describe, I think, activities that are going on in a space where participants are trending toward or idealizing toward a system where there is no traditional centralized intermediaries and no need for them. And so when I say there's a lot of experimentation going on, I haven't seen projects that are, I would say, truly decentralized. Oftentimes there is a centralized party behind the project. They may be using certain things that are carried out on a decentralized platform like a blockchain. They may be using a protocol that can be kind of launched by an individual and used to interact with on a peer-to-peer basis. But oftentimes, the platform does involve central acting parties. Now, there are, I think, efforts to decentralize certain features of platforms or protocols, including, for example, a DAO or these so-called governance tokens. But I think you really need to get behind, just like anything else, the reality of what's going on. Oftentimes, even with these kinds of governance mechanisms, you will find that there is a concentration of either voting power or voting influence or control, and that these things really are being promoted and run and managed by central acting parties. So just taking a step back, I think we do need to just examine each project on its own merits and facts. And that's how a regulator can begin to look at things. But definitely there's a lot of work being done in the international regulatory community and domestically at the US to understand what's going on in DeFi and to have a common understanding around the facts. But I think the same kind of principles are applying at the moment. It's the same activity, same risk, same rules. So what we see in DeFi many times is mimicking or mirroring what's happening in traditional finance or centralized finance. There are trading platforms, lending platforms, borrowing, there's insurance. And so, I think a regulator can start by applying that principle of same activity, same risk, same rules. But again, the facts get more complicated because you're going to have to understand what's going on with the technology and who's using it and how the participants are engaging with it, and stepping back to understand holistically all the participants in any given protocol.
Well, thank you very much. Christina, you've been very patient, and I kind of like that you can respond to the question about the role of central banks. But also, actually, as I'm listening to this, I feel I'm kind of back in the non-bank financing debate, because there's a lot of this question about redeemability, valuation, stability. It reminds me a bit of the money market fund debates and so on that we had 5 years ago, 8 years ago. Over to you. I mean, what do you think is the appropriate? I mean, you alluded to this already, but listening to this, how do we frame the public policy response in a way to deal with this? Because one thing I take away from Val is it's becoming infinitely more complex. More discussion has to be left ultimately to the supervisor, because it's really a case-by-case situation. But how do we deal with that from a public policy perspective?
Thanks. So maybe I'll go back to actually one of the things that you said before about sort of what's new in this space, which I think you said, well, maybe actually the issuance is new. And I think it's actually really important when you think about central banks and central banks' role in thinking about this, and also the financial stability consequences, to actually dispel that. I mean, issuance of something that could be used for payment either by retail consumers or in the wholesale space is not new at all. As you said, there's money market funds, which are often used as a substitute for a cash-like instrument. There are some issues around the stability, and if there are issues and they prove to be not as stable as we want and stress, that can be a source of worry and financial stability risk. But I think actually the more relevant parallel, and the most significant issuance that we have of private sector instruments that are being used as money and used as cash, is the money that we hold in our bank accounts. The vast majority of money that people use for payment, either on the wholesale or the retail side currently, is not issued by central banks. It's issued by commercial banks, and that's private sector money that is being used by individuals. And there's a huge amount of learning over the history of financial regulation that's said, actually, to make that appropriate, to make sure that we have that stability that we need when it comes to the money that people are using every day and the businesses are using every day, we need to have a regulation. And so when we think about that question about why do central banks care, it's really fundamental to our mandate. Some of the most important things that we do are we provide money that either for banks, they use central bank reserves primarily for settling interbank transactions and financial transactions. And then you have cash that we issue. But we also regulate the providers of private money already. So when we're thinking about how do we think about that space, how do we think about the stable coins that could easily be players in this space, we need to think about what we've learned about how do you properly regulate things that are being used for money and settlement. And that has a long history and has a lot of things that we already know. And so I think when you think back to sort of, is this a question that's fundamental for central banks? I think the answer is yes. Is it that I think I agree with the panelists that probably the speed at which central banks started talking about this and the speed to which the international and sort of volume at which we're talking about stablecoins probably increased as a result of some of the really prominent propositions that are out there. But I think the reason why it's kept going is not because of those prominent propositions, but because we don't have to imagine that private sector players could play a role in issuing things that are then used for payment and settlement. That's the world that we live in today. And so it's important to make sure that as new things come along, they don't sort of slip past without actually having the appropriate regulation, because it's also not hard to imagine what happens when things that are being used for money and settlement suddenly are discovered to be unstable. That's the history of many financial crises. So it's how do we make sure that as things that could be used for money and settlement are being created, that they don't slip outside of regulation, but instead are brought in. And that's not to say that they shouldn't exist. I think, again, we already have private sector actors that are issuing things that are used for those purposes. So I think the thing that we need to do is make sure that there's safe foundation for innovation to happen in that space that doesn't lead to something that could then disrupt the innovation.
Maybe I can follow up on that, because the point you just made, Christina, would kind of speak back again for CBDCs. Not only, I take your point, it's about regulating intermediaries and the transmission mechanism appropriately, but it also speaks again for CBDC. Now, the ECB is still trying to make up its mind, but deep down it's made up its mind. It just doesn't communicate yet exactly what its mind is. But in the Bank of England, I'm not quite sure you're quite there yet. I feel it's a bit more open, and maybe I'd be a bit interested, given all the developments we've seen in I don't know how many jurisdictions across the world, why at the center of a big financial center is the Bank of England not endorsing CBDCs much more enthusiastically against the backdrop of some of the things you've just mentioned?
Yeah, so I think as you rightly point out, we haven't made any sort of decision on this. We've said that we're considering it. We've said that we're really looking into what are the costs and benefits of the central bank of the UK issuing a digital currency. I mean, I think when I personally think about this space, I think there's just a question. It's not a question of do you want central bank issued currency to coexist alongside private sector solutions. That's the world that we've always lived in. And there's been an evolution of how much of the money that we're using every day is issued by the central bank versus how much is being issued by the private sector. And that's evolved over time. So I think the idea that these two things could coexist, of course it could. And then there's a question about, should they coexist? Is there a reason? What are the pros and cons of introducing something that's in the digital space? And how do we think about the role of central banks? And so there's a lot of things to work through. We've published a number of discussion papers that lay out the public policy pros and some of the things that we think could be unique about a central bank provided digital currency. But also we need to think through, how does it affect the shape of the financial system? What are the costs of doing so? How do we make sure that other public authorities, because it's not just a central bank, there are things around privacy, there are issues around and what does it mean for protections when it comes to AML, CFT. There are all sorts of issues that go beyond even our remit. So the conversation is ongoing in the UK. It's happening here at the Bank of England. We've had a number of consultations to try to bring in the public. And it's also happening between us and other authorities, because when it comes to this decision, it's not just it's something that's quite important to central bank mandates, but it's also something that needs a broader public policy consideration.
Yeah, and I didn't want to suggest that you're taking a decision against it. It's just why in the timing you've been slightly behind the kind of where the EU seems to be going at the moment, just in sequencing. I think, Marcel, over to you. I mean, you've listened to the debate so far. A lot of praise for Mika, which is nice. That will make you happy. But also, I think, how do you see the link between CBDCs and kind of private solutions? How are you looking at that? Because some people kind of said, oh, well, you know, if Mika takes a bit longer, then by the time it's implemented, the CBDC will have come, and you know, we don't really need Mika anymore. I think that's thinking that's been overtaken. That's kind of 2021 thinking. But how do you see this now?
No, I think you're right. I think you're right. Nobody, I think, at this point in time is suggesting that Mika has been overtaken by developments in the CBDC sphere. Things are a bit more complicated when it comes to DeFi. There, I fully share Val's assessment. A lot of DeFi is decentralized in name only, but I think that's a space that we have to watch very carefully, and we have to start a deep reflection on how we regulate in the future. A lot of EU financial regulation is entities based, and here we'll have to see how we can respond to developments where we do not have any entities that we can regulate, or that we can address regulation to. This reflection is ongoing, and there we are also working with our international partners through the FSB, and hopefully that will allow us to keep up with developments. Now, when it comes to CBDCs, the stated objective of the ECB and the Euro system is to develop a digital currency that that coexists and does not replace private solutions and private payment services in particular, but also crypto assets and stable coins. We at the Commission would support that objective. We should have an ecosystem in which all of these things can coexist and can thrive, and can be drivers of innovation in their own right. Now, to ensure that, we need a proper design of the digital euro that allows this complementarity and coexistence and also competition between the different private and public solutions. So a lot depends here on how we are. How the digital euro or CBDCs more generally are designed, what business models are being used, and what ecosystem this will ultimately result in. And here the reflection is ongoing in the Commission and also with the ECB, but for instance, we believe that there are good reasons to believe that a digital euro can most efficiently be distributed by private service providers. So we believe that this intermediation would not be a good thing. We believe that private providers will have the customer base, the experience, the tools, the infrastructure, the processes that you need to make a CBDC successful. And the private sector will also have the innovative force to create add-on services and use those opportunities. And that means that we also need a fee structure that allows for private payment solutions to coexist. In particular, when it comes to point of sale or also e-commerce payments, to make sure that they are not squeezed out by digital public money. Then we believe that a digital euro could be at the basis of truly European standards that private payment providers could use and develop further in pan-European offerings. That a digital euro could also help market entrants to upscale faster, given that that they can build on an infrastructure and on an acceptance of merchants of a payment solution that they can build on. we also see use cases where a CBDC could has the potential of perhaps being more attractive, machine-to-machine payments, for instance, or micropayments, but also for offline payments. And then there is an area that has already been alluded to, and that is the area of security settlements, where we think CBDCs can also have a big potential, and that is not exhausted by our DLT pilot, which only addresses settlements via private commercial bank money. So overall, we see a lot of potential for a digital euro to become part of a very varied digital ecosystem.
Thank you, Marcel. And it was interesting because I was needed to ask you, because everything you said out was very retail focused, and we expect the ECB to launch in the retail space. But then at the end, you kind of brought in the securities clearing and settlement to just open it up and make us guess again. But no, very good. I think, again, maybe turn to the industry. And conscious of time, I bundled two questions together, Faria and Marco, which is, on the regulatory side, what are 2 or 3 things you would like to see from policymakers to facilitate this market? I know, Marco, you talked about AML, for example, and more clarity around KYC onboarding and so on. That's one question to each of you. And the other one is I want to move to the international issue because I think it's really important. I would be interested not just what type of public policy responses you would welcome to see this market continue to grow, but also what type of international measures, coordinated measures, would you like to see? Because I take your point, you said at the beginning, clarity and legal certainty are the basis for this market to grow. So what would that contain if you had a magic wand, Faria? What are the 3 or 4 things you would like to see from policymakers?
Thanks, Nick. It's a really good question. And I think the interventions from the officials have been excellent and useful. I think a lot of the things that Valerie laid out, for example, are very much consistent with the kinds of things that we agree that policymakers should take a careful look at. I think the one point I would want to make is, and this is particularly true in the U.S. regulatory context, because our U.S. regulatory system is enormously fragmented. It's uniquely fragmented in the sense that you have a multitude of regulators doing functions that in other markets you have maybe 1 regulator or 2 regulators being comprehensively responsible for. And so it's a very hard public policy question in any context where you have financial regulation, which is largely organized around the regulation of intermediaries, to figure out what to do with a disintermediating technology, because that is ultimately the power of crypto and why it is a significant reason why the adoption curve is so steep and why the adoption at the wholesale level, including the interest in adopting the technology through, in institutional settings, is so high, because it addresses so many of the problems that our traditional system has not been able to deal with. And regulators then are in a bit of a difficult spot because they want to figure out how to bring appropriate regulatory discipline into the market, but at the same time, and I think this is again particularly true in the U.S. context, their mandate is often driven by their responsibility for regulating a particular type of legacy intermediary that may not necessarily have a place in a disintermediated digital version of the market. And so, for example, if you read the President's Working Group report that the U.S. regulators issued, which was a very thoughtful, important contribution to how the US is thinking about regulating stablecoins, much of the discussion there was organized around parsing through with all the different regulators, their regulatory perimeters, what stablecoins are most like, and therefore which home potentially you could put stablecoins into, given that fragmentation. That is not a dynamic that you see in Europe, for example, with MiCA or in other jurisdictions where they just don't have to grapple with that kind of fragmentation issue. And so I would say as a general point, there's an important kind of decision we all have to make about whether we embrace the innovation, whether and the disintermediation. And I'm not talking about disintermediating commercial banks in terms of CBDCs, which Marcel was discussing in part. I'm talking about disintermediation, about whether all the market players that are in the life cycle of an asset transaction ultimately have to be protected by regulation in terms of their function. So transfer agents, custody agents, there's a number of things that ultimately the digital technology obviates the need for, but that requires hard work, and sometimes it requires legislative revisions to the laws. So I think we all agree with the concept of technology neutrality, but that neutrality sometimes has to acknowledge that digitization actually is an innovation that has certain advantages that we either embrace or don't embrace. And so, and as I said before, reducing settlement risk, reducing operational risk, reducing frictions in cross-border flows. And then when you go to the more retail, a real sort of economy level or real person level, you've got a multitude of countries where you have remittances that make up 10, 20, sometimes more than 20% of GDP. And if you're talking about the complexity and the frictions associated with remittance flows and how digital assets can be an answer to, and stablecoins can be an answer to that, where you reduce those costs in populations that are least capable of affording the fees and charges that are endemic in the legacy system. These are all sort of transformations that are that would be, we should work, all of us should work together to try to embrace. They are disruptive. They're disruptive to legacy market participants, and they're also disruptive to how policymaking has been organized. But I think, and I think people like Marco and myself understand the responsibility that we have in making our own contributions to the policy debate so that we can, help with this important question. So I would say that. And then I would reiterate the point I made at the outset of my remarks. All the points that Valerie's made and others have made about, user protection, market stability, systemic risk, AML. All of these things are important policy objectives. We embrace all of them. But again, in that same spirit of the contribution I made before, if we take the solutions that made a lot of sense in the legacy analog financial system and try to transpose them on the digital system in identical form on the theory that we've achieved technology neutrality, that's not the answer. And I know that none of the officials on the panel here are suggesting that at all, but just for the sake of making the point starkly, I would just say there are answers. And I think, for example, the DeFi one's a good one. We very much understand there's hard questions around AML protections in DeFi, and there are also definitional questions about when DeFi is truly DeFi as opposed to, something more ambiguous than that. These are all important questions, but I think we, I would just encourage all of us on the industry side to do everything we can to contribute to the policymakers' hard work in grappling with these issues. But I also would urge the policymakers to, take some time in making sure that nothing happens precipitously in a way that inhibits the development of a technology that I think, by the virtue of the power of it, is almost inevitable. But if regulators, take some action that impedes an innovation, which I think ultimately has important societal benefits.
No, I think the only thing I would say, Marcel can disagree with me. I think getting one regulator in Europe or two, Faria, will be as difficult as in the US. I list consumer
Well,
protection
yeah.
rules and conduct rules. So maybe in other places, but here we're a bit far off from that yet. But I take your point. Marco, over to you. As I say, you raised, we heard about AML a few times and KYC onboarding. I sometimes think, but when we started on MiCA and I had conversations with Marcel's team on drafting it, I was sometimes a bit naive, which I can be as a lobbyist. So I kind of said, why don't you just regulate the exchanges, the entry point and the exit point? And that's exactly what you're doing on AML. And why don't you do that in principle? And then once those entities trade with each other, that's separate, but you don't have to waste in regulating all the details of that. So regulate exchanges, so to speak. But how do you see that kind of point about entry and exit? And what would be the regulatory issues that you would like to see addressed? And what does that mean also for international regulatory approaches?
Yeah, it's a good question. I think you're probably expecting that the exchange guy will say don't regulate the exchanges. But I don't feel that way at all, actually. I think that the approach that regulators and policymakers around the world have taken, which is to try to contain the risks within the crypto ecosystem, has by and large been effective. I mean, you're always going to have people who say you think we should be doing more, or we should be doing less. But if you look at the world of digital assets as it exists today compared to the world of digital assets as it existed back in, gosh, I don't know, 2014, even 2016, markedly different. We've seen regulators and policymakers come up to speed. We've seen them close the education and knowledge gap. We've seen them we've seen them by and large take actions that made sense given the growth of the ecosystem. I think that the appearance of Facebook and Libra, like I said earlier, on the scene really shook the table, and was really a watershed moment that changed the way that policymakers and regulators look at digital assets. I think that now the industry is taken much more seriously. I think that Facebook has piqued those interests. And they arrived solely to peak interest and then to disappear into the shadows, which is a fascinating phenomenon for somebody like me who's been doing this since 2012. I've been in digital assets since 2012, since nobody was calling it digital assets, since it was just Bitcoin, and I've seen a lot of waves. And with each of those waves has come opportunities. And I'm not just speaking in the typical policy person speak of risks versus opportunities and weighing them and trying to maximize one and minimize the other. I think there are some very specific opportunities that present themselves today in the world of digital assets, in this particular wave of digital assets. Right, first we had Bitcoin, and the regulator that was under the spotlight when Bitcoin came about, at least in the U.S., was FinCEN. No, the SEC was not on the scene then. The SEC came in very quickly once it looked like it was going to touch anywhere near their jurisdiction, got up to speed very quickly. And then it did in fact touch their jurisdiction. We had the rash of ICOs, right? Initial coin offerings, which are not as fashionable today as they were a number of years ago. But that was another wave that came into crypto. That wave had this important characteristic that I think should inform the way that we look at this wave of stablecoins. The world did not agree, and still does not agree, on what is a security. The world largely agrees, though, on what is financial crime and what is a currency. Right, those are much more universal ideas than, or I say more shared ideas than the question of what is a security. Right, there's 2, maybe 3 countries in the world that have something resembling a Howey test in the United States. So whereas there was a major collective action problem in coming to consensus and addressing and developing a uniform approach to token sales, for example, the U.S. had a markedly different approach and still has a markedly different approach than Europe has. I don't think we have that problem when it comes to currencies. I don't think we have that same problem when it comes to stable coins. Of course, countries are going to differ. Of course, countries are going to differ on how they view the goals of proper regulation, and of course, they're going to differ on what they believe each individual cause of action ought to be for a particular piece of criminal activity. But this is a tremendous opportunity for collective action, where we can actually we can ask more from our policymakers, and we can ask more from our regulators in delivering a uniform, coherent, cohesive approach globally to how to regulate stable coins. It's not something we could do around token sales. This is something special, and I think it's worth getting right. That's the opportunity that I think is in front of regulators today when it comes to stable coins.
It's interesting you say that, because I'm looking back to maybe 18 months ago, maybe not quite. I was in a panel organized one of these things, and Chris was on and Val was on, and we spent a lot of time discussing possible taxonomies of cryptos to solve the problem you've just described, to kind of come to a common denominator for international discussions. And Chris, how do you see it? I mean, I sometimes look back and say, okay, listening to this, we could give part of it to CPMI. You kind of apply your financial infrastructure guidelines, principles, to these type of new players, and you can give a bit of the conduct bit to a IOSCO, and then you just kind of deal with it. But I think it's a valid point. Given these are global phenomena, and given we want to avoid a crowding out or regulating out phenomenon by which we say we don't want reverse solicitation, we don't like guys from abroad, and we accept that we have to regulate in, what is the appropriate way you think to look at this internationally, to come to some form of consensus? And dare I say, at some stage from a European perspective, because we love it, equivalence. If we can look at some of the securities issues or deference or whatever, substitutive compliance, you can substitute the term. But how do we come to some form of a common denominator potentially here?
So I think a few things. I mean, firstly, I think we have to accept at this stage, you will have certain major jurisdictions that have taken a position around crypto assets in particular, that mean that you will not get full international consensus in anything like a reasonable time frame. So if you look at the policy that's being pursued by China, they've taken a very, very clear line on where do they think they stand on these things. So it will almost certainly be a coalition of major jurisdictions if that's achievable, rather than a completely global approach, I suspect. I mean, the second thing is, and I think we sort of ignore this at our peril, but I mean, one of the big issues, I think, within Libra and DeFi and all those kinds of conversations went beyond simple, if I can describe it as that, having been one, I think I can probably describe it as that simple sort of standard regulation, and it actually got into issues around, well, where are we in terms of sovereignty, in terms of the issue of central bank currencies. Does this provide a rapid means of dollarization and those kinds of issues in certain countries around the world, far quicker than physical dollarization might run. And so there's a layer here, I think, to get to that sort of international level of agreement that goes simply beyond dealing with questions around AML or terrorist financing or whatever it might be. But then I think if you sort of accept all of those things as a given, then there are, in the way that was being talked about by Farah and Bob Arco, I mean, I think there are a number of significant areas and use cases where you say to yourself, we can already see what's happened for relatively wealthy people around the international money transfer market and the role of crypto, of going from fiat to crypto to fiat, for example, in terms of reducing costs massively in those sorts of chains. Money remittance on the whole tends to be a business that involves people from actually some of the poorest parts of the world working in slightly richer countries being able to send money home. So there's an awful lot of use cases, I think, where you can look at this and say there could be some significant advantages. And so could you get to broad agreement about how you deal with these things? And I do think to some extent, and this is the story of innovation, I think more generally, looking behind that, actually the point that Val kept making of, if it's the same risk, and Christina made it as well, it's the same risk, we deal with it in the same regulatory stance, you try not to allow the arbitrage. So I think that gets you an awfully long way. But then I think there are features around this market, and if we think of something like Bitcoin, for example, I mean, it would hold itself out as being effectively a payment token, a means of transferring value between one person and another and completing a transaction. And yet we can see the actual human behavior around it is people buying Bitcoin as effectively a substitute investment, far more like people might buy a security. So I think we have to accept that there will be certain places where there's likely to be a need for something a bit hybrid and something a bit particular about this market. I think there's also some really big questions about if you're going to regulate things that don't necessarily have a physical presence on shore, how do you deal with that? Do you insist they come on shore, which I think has been the stance pretty much so far from most regulators, or do you think of other ways that you can deal with that in terms of international cooperation? So there's definitely a prize there, I think, in terms of what you've just described. I think there's also a question of, could you use systems like deference, for example, to allow greater international recognition and cooperation. But I also think there are some things that are particular and are special about these markets that might need either a degree of adaptation, but certainly also a degree of dealing with some of those kind of top level issues that really came to the surface back when regulators were thinking about Libra, or Diem as it is known. So yeah, I mean, I think there's definitely a space to sort of try and conclude, but there's also, I think, a whole series of challenges here that are quite particular to these kinds of instruments.
To you, Christopher, linked to this. I mean, one trend I see internationally is a huge number of emerging financial centers, Middle East, I don't know, wherever else I want to pick, Southeast Asia, whatever, seeing cryptos as a way to leapfrog beyond the existing infrastructure that they can't build quick enough, so to speak. What do you see as the challenge from that? Because either they come into the boat from a trust perspective, or you have certain issues in that there will be this constant game theory of certain regulators trying to create a unique environment to build a center, so to speak, and basically have a certain level of arbitrage.
So I think there's sort of two quick parts to that, and I'll try and be really brief because I'm conscious of the time. But I mean, I think the first element is the role of technology in helping countries leapfrog is I think well known now. I mean, if you look at M-Pesa in Kenya, it's always the original kind of case study that's cited. But I think where technology can help countries develop their economies to help them deal with questions around settlement and those kind of issues, I think we shouldn't be sort of closed to that. I think the interesting question, and I think certainly the panelists you've got here, and indeed a lot of the people that I think we see out in the market who are running exchange businesses, who are trying to get that wider blending of crypto or stable coins into the mainstream financial system, are getting to a scale where they realize that some form of acceptability to strong international standards, to having regulation around a product to ensure that it's got wider consumer confidence, but also wider regulatory acceptance, and indeed, particularly when you have regulated banks and others holding these kinds of assets, how central banks and others will view those assets, for example. All of those things drive towards, I think, a raising of standards here if this market is going to develop and break out beyond where it has been, which I think has been viewed as being a sort of an activity that a certain portion of most populations engage in. If this becomes far more mainstream, then I think almost inevitably you will see standards that come up to a global recognition being the norm that not only do the regulators want to adopt, but actually I think the firms in the markets will want to adopt.
Thank you very much, Christopher. And I think I couldn't have asked for something more perfect as a response, because when we started at 9 o'clock, we started with how the Payment Services Directive, in a much smaller scale, created a regulatory framework and certainty that let the non-bank payment sector flourish in Europe. And I think we're talking about something similar here, and Faria and Marco both talked about that as well. I can only thank you all for having been with me at this time of the day. It's actually remarkable how stable our attendance was and how high, which I think speaks to the quality of the discussion, and I think also the timeliness of the issue. I very, very much appreciate you all taking time. We were thinking whether an hour and a half would be too much. I, frankly speaking, could go on for another few hours, but I know that at some stage, we need to have a life or go back to earnings, doing our real-time job, so to speak. So I really appreciate your time, your wisdom, your input into this, and your support for the conference. For those who are in Europe, I wish you a nice evening. For those in the US, I wish you a lovely afternoon.